Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. News on the Chinese real estate crisis was scant this week as the highly secretive regime sought to avoid distracting from the Olympics. With that said, we did receive some major news on the part of China's real estate developers as their sources of funding continues to dry up in a big way. Further, we also received news that I think is going to really matter for the future as Beijing is continuing to open up its purse strings for the housing market, but not in a way that Western investors are going to like.
And I didn't like it one bit!
So what I want to do today is check in with Evergrande as there was some news out of the real estate developer, which is going to be at least somewhat comforting.
We're not in the home improvement business, we're in the customer business.
Then I want to take a look at the bond environment in China as we received news this week that real estate developers, those looking to access cash, are having more and more trouble getting funding, and the funding that they can get is much more expensive. And then finally, we'll go through some of the People's Bank of China's moves to make accessing funds easier, but only for domestic investors. China's real estate crisis is forcing the Communist Party state to move in somewhat of the opposite direction of the West. We just received news yesterday that U.S. inflation rate hit 7.5%, so there's definitely going to be more pressure put on the Federal Reserve, put on the central banks in the U.S., in Canada, to raise interest rates.
Just get it over with.
Whereas China is moving in the opposite direction as they need to get their inflation up, they need to get their economy back up and going. So the world's two biggest economies, the US and China, moving in exact opposite directions vis-a-vis monetary policy, and the outcome of which is going to be very interesting, and we'll obviously have updates on that out every Friday for our China update, and we'll continue to have updates out on the monetary policies of the US and Canada as our inflation rates continue to go up and up and up. If you want to get those updates, click like and subscribe, but for now, let's get into Evergrande. Before getting into the big news from the founder about Evergrande's moves for the future, I just want to go over one quick news story as we found out this week that at the beginning of the real estate crisis in the summer, Evergrande's CEO sold off his bonds in anticipation of the crisis occurring.
Evergrande CEO offloaded about $150 million in face value of dollar bonds between July and August.
And I mean, this definitely doesn't look good. Although he had to sell them at a discounted rate, he had insider knowledge and did get rid of his bonds much quicker than the rest of the market.
Leave me to deal with all the
And while this doesn't affect the crisis unfolding now, it is noteworthy that the people on the inside knew from very early on in the summer how this was going to go, that this real estate crisis was going to unfold badly. So I just think it's interesting that this news is starting to come out now. But we did get some interesting news from Evergrande that it does plan on building all 600,000 homes that are due to home buyers in China. Well, we had spoken last week about Beijing potentially breaking up the company and just buying up all of the assets that nobody wanted, the unprofitable assets. It looks as though the government is going the other way and somewhat forcing Evergrande to try to make good on all of its promises to home buyers. Biggest reason for this, as that many are noting, is that Beijing realized that Evergrande doesn't have enough assets to sell off to cover its $300 billion in debts. If this sounds familiar, it should. Back in 2008, the U.S. government's initial plan was to buy up toxic assets, buy up those assets from the banks that nobody wanted, the mortgage-backed securities, the subprime that nobody wanted, and then that would make the banks whole. Once it became clear that this was going to take too long, that this was going to be a drawn-out process, then they moved to the $700 billion cash injections that they did for the banks, which ultimately, depending on how you look at it, solved the crisis. So China has already gone through that route where they considered buying up toxic assets. According to some experts, they've realized that this is going to take too long and they were probably too late to the party. And now we wait to see what happens next. I think this is really interesting as it really shows that this crisis is unfolding in much the same manner as 2008 did.
I'm getting a deja vu.
Although the causes of both crises are obviously different, both were essentially a credit crunch, where the lending has dried up from or funding and credit has dried up from the traditional sources, and the government now has to get involved.
I have money. I can help.
So, If this continues to unfold the way 2008 did, then we should be looking for China to continue to loosen up its monetary policy, and I would assume would be getting into some major fiscal stimulus in the next coming months. Speaking of a credit crunch, news came out this week that the sale of bonds by real estate developers to foreign and domestic investors fell by 70%. Compared with 2021, as traditional bondholders remained ultra hesitant that they would be paid back were they actually to buy these bonds.
Pay you back for it, okay? How?
Further, the cost of borrowing, the yields on these bonds has also shot through the roof. It was reported this week that the bonds that are being bought up, yields were up 263 basis points compared with December. So of the bonds that were sold, and there weren't many, we had a 70% drop, a major price premium is being held on those bonds. And this was always the worry from the beginning. During a credit crunch, when you need access to cash, is when access to cash gets the most expensive. When you don't pay your bills because you're low on funds, it becomes even more expensive to access new funds, which makes it even more difficult to pay your bills, and the problem just snowballs. And this was one of the biggest worries from the beginning of this real estate crisis, that this would just continue on, so that these real estate developers can't get access to the funding that they need to complete their projects, to sell those projects, to get the funding to pay back previous investors. And this was the worry from the beginning. It does seem to be bearing that out, what we were talking about months ago in China.
Yeah, welcome to your show.
Speaking of access to funding, the PBOC, the People's Bank of China, curbed financing rules for the real estate sector this week, but only on the condition that the funding be used for affordable housing. And then in addition, they also called on the banks again, and they've done this before, to boost lending for this affordable housing. This really shows a market shift on behalf of Beijing, who at least for the past few decades has moved towards more of a market-based economy. Obviously ruled by the Communist Party, but a market-based economy nonetheless. But what they're not bailing out these real estate developers, at least as of yet, but they're not providing cash injections. They're not making it easier for these real estate developers to access funding to continue on in their old ways. What they're doing is trying to get more affordable homes out to the population as part of their common prosperity agenda.
Rather than just being a sign potentially of easing, the more important signal here is that the common prosperity goal, the aim to make housing cheaper and more available for all, is really going to remain central to Beijing policy.
This does signal a market shift on Beijing's part, moving away from market-based reforms to more of a state-controlled, state-run, good for all reforms. I don't want to say communist, but if you're moving in two directions, one is capitalist, one is communist, this would be more on the communist side than capitalist. Not to say that they're moving full on communist, but it's definitely a shift in the direction that they're going with their economy. And I think we should look forward to that in the rest of 2022. On the one hand, we could see this play out, as we said, as it did in 2008, where China is basically forced to do massive amounts of cash injections, massive amounts of stimulus for the banks, for these real estate developers. On the other hand, we do have China with this common prosperity agenda, where they're trying to lift everybody up. So it'll be interesting to see how they try to manage and balance both aspects of this agenda, of the one, making sure that they tame the real estate crisis because they don't want a political problem, but also keeping with their common prosperity agenda, which has been a real center point for Xi's policy since coming to power. And it looks like it's going to continue to be for his third term. We'll obviously have updates out on how this unfolds and how it does look for the real estate developers and the PBOC. And if you want to get those updates, make sure you click like and subscribe. And thanks so much for watching.